Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 7th, 2025, we're zeroing in on Amazon, ticker symbol Amazon, a stock that has seen its fair share of excitement and volatility recently. We'll combine the latest news and detailed chart data to give you a comprehensive understanding of where Amazon stands. First, let's set the stage with the latest news, especially following Amazon's Q2 earnings report. Despite beating Wall Street expectations on revenue and EPS, the stock experienced an initial dip of over 7% post-earnings, primarily due to concerns about slowing Amazon Web Services, or AWS, growth, which spooked some investors. This short-term pullback created palpable uncertainty, but the narrative quickly shifted for the better, fueled by reports of Amazon's first significant link-up with OpenAI, which sent positive ripples across Wall Street and beyond. This pivotal development, coupled with robust performance in its core retail and burgeoning advertising sectors, has helped Amazon recover much of its recent losses with impressive speed and conviction. Analysts are overwhelmingly bullish on the stock, with a strong buy consensus rating across the board and an ambitious average price target of $264.21, suggesting a substantial upside from current levels, a testament to its future potential. Looking at the broader historical picture, Amazon's performance underscores its phenomenal long-term growth potential. A hypothetical $1,000 investment at its 1997 IPO would now be worth nearly $1.9 million. This remarkable resilience, even through challenging periods like the dot-com bust and recent economic headwinds, speaks volumes about its diversified business model and enduring market leadership in technology and e-commerce. It's clear that Amazon continues to evolve, adapting to new market demands and leveraging its vast ecosystem to drive future gains. Now, let's connect this compelling news directly to the recent price action we see on the charts. Shifting our view to the one-day chart, focusing specifically on the period around the Q2 earnings release, we can clearly identify the post-Q2 dip that surprised many investors. Observe the sharp decline that initiated around August 1st, 2025, taking the price from highs near $234 down to critical lows around $211 to $212 by August 4th, marking a significant drawdown. This rapid sell-off, which initially caught many off guard, created a strong demand zone, establishing a significant short-term support level around $211.42. A price point where buyers stepped in with remarkable force and conviction. Crucially, the candle for August 6th, the most recent full trading day, shows a strong and decisive bullish reversal, completely absorbing previous selling pressure and indicating a shift in momentum. This powerful single-day move, closing significantly higher at $222.31, aligns perfectly with the breaking news regarding the OpenAI partnership and renewed analyst confidence in Amazon's future trajectory. It suggests that market participants have quickly absorbed the initial earnings concerns and are now aggressively pricing in future growth catalysts, especially from the high-growth and high-potential artificial intelligence sector. This strong bounce from the $211 to $212 support level not only confirms its significance, but also indicates a potential fundamental shift in short-term sentiment, making it a key price level to watch going forward. The volume accompanying this bounce also adds conviction, suggesting institutional money is flowing back in. To gain an even more granular perspective on the dynamics of this impressive recovery, let's transition to the one-hour chart, focusing closely on the price action from the past few trading days. Here, we can observe the immediate intraday reaction to the low reached on August 4th, displaying a clear and consistent series of higher lows and higher highs developing since that point, confirming an emerging uptrend. This pattern is a textbook example of a healthy short-term bullish reversal, signaling that strong buying pressure has been systematically building up during consecutive market hours, indicating accumulation. The sustained price action on August 6th, particularly the consistent pushes above prior hourly resistance zones, clearly highlights strong buyer conviction and an underlying demand for Amazon shares, overcoming earlier supply. We can identify immediate intraday resistance forming around the $223 to $224 area, which could represent minor profit-taking or short-term supply at these levels, requiring some consolidation before further ascent. However, the consistent and robust volume accompanying these upward moves throughout the hourly sessions lends significant credibility and strength to this ongoing rebound, suggesting it's not merely a short squeeze or temporary fluctuation. Therefore, active traders should closely monitor whether Amazon can consolidate effectively and hold above the psychological $220 level, which now acts as a freshly established support following this impressive rally from the lows. A sustained break and hold above the $224 mark would unequivocally signal further upward momentum on the hourly time frame, potentially targeting higher daily resistance levels with conviction and attracting more buyers. The momentum indicators on this time frame would likely show a bullish divergence or sustained strength, supporting continued upward movement. Watch for any intraday pullbacks that hold above the 220 mark as potential entry points for a continuation trade. Now, let's zoom in even further to the 15-minute chart to analyze the most immediate and critical trading signals leading into and out of yesterday's close. On this highly granular time frame, we gain insights into the microtrends that collectively form the larger daily candles, clearly illustrating the underlying strength of the bullish momentum sustained right into the end of the August 6th trading session. Notice the remarkably consistent upward channel that was maintained throughout the entire latter half of the day, characterized by tight, bullish candles and strong closing prices, reflecting controlled and continuous accumulation. The current pre-market indications, while not directly displayed in our historical candlestick data beyond the previous day's close, strongly suggest that the positive sentiment stemming from the OpenAI news is carrying forward, potentially leading to a gap up or continued strength at the market open. For astute short-term traders, the levels around $220.50 to $221.50 could now serve as immediate and critical intraday support if there is any minor pullback or profit-taking after the market opens today, offering a low-risk entry. Immediate resistance would be yesterday's 15-minute high around $222.65, and a decisive break above that level would rapidly open the path towards more significant daily resistance levels, signaling a fresh leg up in price. Monitoring volume on these smaller timeframes remains absolutely crucial for confirming price action. A sudden drop in volume on upward moves, or a noticeable spike in volume on downward moves, could signal potential buyer exhaustion or an impending temporary reversal. Look for bullish flag patterns or continuation patterns on this time frame if the price consolidates before breaking higher. A strong opening print today, especially above yesterday's close, would reinforce the bullish conviction from this time frame. Transitioning back to the overall one-day chart, let's broaden our perspective and consider the mid to long-term outlook for Amazon, beyond the recent post-earnings volatility. Despite the occasional short-term pullbacks, Amazon has been in a clear and consistent uptrend since early 2024, consistently forming higher lows and higher highs over several months, indicating a healthy bullish structure. Throughout this impressive ascent, we've seen strong resistance areas emerge, first around $230, which often acts as a psychological barrier, and then more notably near the $240 to $242 level, which represents significant previous swing highs and a potential all-time high barrier. A decisive retest and a sustained breakout above these key psychological and technical resistance zones would unequivocally confirm the continuation of the broader long-term bullish trend and signal new all-time highs for Amazon. Fundamentally, Amazon remains an incredibly strong and diversified company, primarily driven by the consistent profitability and robust growth of its Amazon Web Services, or AWS, segment, which accounts for a substantial portion of its operating income and provides steady cash flow. The ongoing expansion and innovation within its core retail and high-margin advertising segments also provide robust revenue streams and crucial business diversification, reducing reliance on any single sector and building a resilient business. Therefore, for astute long-term investors, any significant dips or pullbacks in price, especially towards established support, should largely be seen as potential attractive buying opportunities, given the company's continuous innovation and dominant market leadership in both cloud computing and e-commerce. The strategic and forward-thinking investments into artificial intelligence, such as the widely publicized OpenAI link-up, further bolster the already strong long-term bullish case by strategically positioning Amazon at the absolute forefront of emerging technological advancements and new revenue streams. This multifaceted growth story makes Amazon a compelling long-term hold for many portfolios. The company's strong balance sheet, with significant total cash and manageable debt, also provides a solid financial foundation for future expansion. To concisely summarize our in-depth analysis for Amazon stock on this pivotal August 7, 2025, let's recap the critical price levels and outline the most likely potential scenarios for traders and investors. The immediate and most important strong support level for Amazon is firmly established around the $211 to $212 range, which proved resilient during the recent post-Q2 dip and is reinforced by the powerful bullish reversal. Current short-term resistance is approximately $223 to $224 on the intraday charts, with the next significant overhead resistance at the key psychological and technical $230 to $235 zone. Beyond that, the $240 to $242 level stands as a major historical resistance hurdle, representing prior peaks that will require substantial momentum to overcome. Our unbiased prediction is that Amazon has a high likelihood, approximately 70 to 75% probability, of continuing its short-term bullish momentum towards the $230 to $235 resistance if it can sustain above $220 and decisively break through $224 with conviction. This upward trajectory is particularly reinforced if the broader market indexes remain strong and if further positive news on Amazon's AI integration or continued robust AWS growth emerges in the near future. However, a retest of the critical $211 to $212 support remains a tangible possibility, with a 25 to 30% likelihood, particularly if there's an unexpected broader market correction, a significant shift in monetary policy, or any unanticipated negative news regarding cloud segment growth. For active traders looking for clear confirmation of breakouts above resistance with strong, expanding volume is key for initiating long entries. While a clear and sustained break below $211 to $212 on heavy volume would unequivocally invalidate the recent bullish short-term thesis and signal further downside. Long-term investors, on the other hand, should continue to diligently monitor Amazon's strategic AI initiatives, particularly any revenue-generating partnerships, as well as its ongoing AWS growth figures and the overall macroeconomic health, as these fundamental factors will underpin its sustained upward trajectory over the coming years. Finally, keep a very close eye out for any upcoming corporate announcements, especially further details or progress reports on the OpenAI collaboration, as these specific events could act as highly significant catalysts, potentially driving the stock to new all-time highs. Thank you for joining us on Explain the Charts, and always remember to conduct your own thorough due diligence and research before making any trading or investment decisions in the markets.